Bitcoin does not need an ETF. It has never needed an ETF, and it certainly won't need an ETF in the future to continue along its trajectory. This is something that I've been thinking about for quite a long time, and I know that this goes a little bit against what most people say in general. In general, most people are big fans of things like ETFs. They're big fans of things like the CME futures that released. But in my opinion, both of these derivatives and financial instruments, even though they're backed on Bitcoin, and yes, they do lend some level of credibility for Bitcoin and crypto as a whole. They're really in they're really not doing too much positive, and in my opinion, they're usually doing a little bit more harm than good. So first, I suppose we should talk a little bit about historically what what has been attempted, what has been pushed with respects to these ETFs, with respects to these financial instruments. So obviously we've had the Van Eck Solid X ETF, which is one of the more popular proposals for listing a Bitcoin ETF. We've had the Winklevi twins a while ago, a few years ago, when they initially tried to do the very first Bitcoin ETF, and they have been delayed and denied. And then we've also had other smaller companies like Bitwise try and do an ETF, so on and so forth. And then also from the other derivative side, we've had the CME futures, which did actually came out. What was the first day of trading for CME futures? I think it actually was the exact top. It was December 17th, 2017, when the CME futures started trading, and that basically marked the very top of Bitcoin. I think the price was something around 20,000 or 19,900 or somewhere around that $20,000 mark. And since then, obviously, it has been a massive bear market up until recently, where things are looking pretty good again. And then finally, we have the little bit lesser known, but certainly a force. It is the Grayscale Investment Trust. I'm not sure if Grayscale Investment, I don't know if it's a trust, but it's called Grayscale Investment, and it's led by Barry Silbert. And with Grayscale Investment, you can purchase Zcash, you can purchase Ethereum through in a much more, let's say, regulated way, rather than just buying it directly off of Binance or off of Coinbase or off of someone else. So all of that to say that there have been attempts to doing this kind of thing, and there has been the push to bring Bitcoin to a larger market, to these traditional investors, to this legacy audience, to the old money, because a lot of what Bitcoin is, and a lot of crypto holders, you're going to be very hard pressed to find someone who's older than, say, 30 years old, who really gets and understands what Bitcoin is, the opportunity it represents, and all these things. So, but for these people, of course, they're obviously interested anyway in the way you can hedge against world markets with it. Some people believe that that's a decent theory for buying Bitcoin. If you have a lot of money, you can put 1% in Bitcoin. And Bitcoin, because it's not correlated with anything, it's not correlated with tech stocks, it's not correlated with Amazon, it's not correlated with oil or whatever else, then Bitcoin can generally be one of those things where if you follow modern portfolio theory, you buy some Bitcoin and then it performs however it performs. But it adds a level of diversity and a little bit more strength, survivability to your portfolio. So it makes sense, right? It makes sense to bring things like Bitcoin and Ethereum and these new assets onto the market for legacy investors. But again, I personally hold the opinion that they don't really do very much for crypto, much in and of themselves. They don't really add anything to the ecosystem. So I will say in the case of ETFs, obviously they keep getting continually delayed. This happens over and over again. The ETFs, they keep getting listed. We keep seeing something that a date comes up where I believe it's the SEC, they need to decide if they want to approve this thing, and then it doesn't get approved. And then we need to wait another 3 months, and then in 3 months it gets delayed again, and then it gets delayed again, and then it gets rejected. And so that has happened pretty much since, when was the earliest case? Maybe 2015, when people tried to do an ETF. I believe the Winklevi tried to do one 2015, and it got rejected, obviously. And so ETFs hasn't happened. I'm not personally convinced if it will happen, but it's definitely a topic for another video. In the case of futures, obviously, we have seen futures that have come out, CME futures being one of them. But in my opinion, with futures, the way that futures work, and this is really one of the crux of crypto, and the reason why crypto is interesting, or at least one of the reasons why, is it has a lot to do with scarcity. So Bitcoin, there's only 21 million Bitcoin. That's the maximum amount that there will ever be. So it's deflationary after all of the Bitcoins are mined. It's inflationary currently, but when that's done, it will be deflationary. And because of that, there's a certain amount of value placed onto it. There's a certain amount of faith put into that because, well, actually, we don't need faith at all. We know how much Bitcoin there's going to be. In the case of something like gold, these things can be manipulated, supplies can be manipulated, prices can be moved around. The amount of gold that hits the market can shock the market and change prices, and that has happened. And a lot of people make a lot of money on that, inside traders and all of that. But in the case of Bitcoin, there's 21 million. The problem is when you have something like a futures product, you basically, for those who don't know what a futures contract is, it's basically a contract. It's just a piece of paper, essentially, we can say, although they're all electronic and digital nowadays. But it's a piece of paper that says you're entitled to buy or sell an underlying asset. In this case, it would be Bitcoin. But what people will do is they will just trade the asset, or they won't trade the underlying. They'll just trade the contracts. So you can do this on BitMEX. You can trade a whole bunch of contracts. You can, whatever the hot wallets are in BitMEX, you can go leverage higher than whatever the amount of Bitcoin that exists, right? Because this is a derivative product. And so what that ends up doing is that causes almost a little bit of its own supply shock. Because if I have, let's say, $10, instead of adding my $10 into the pool of other money that has bought Bitcoin, and reducing the supply, therein reducing the supply, I am now spending my $10 on this derivative product. And because I've spent my $10 on this derivative product, that money is never actually affecting the amount of Bitcoin in the supply. And so this is really the downside of futures, in my opinion, because while it may not be so relevant for other assets, because they're not as... the supply is not hinged so much on, or the value is not so hinged so much on the supply. In the case of Bitcoin, certainly you can say that one of the reasons why it costs as much as it does and why it's valued as much as it is because there's only 21 million of them. Obviously, so in the case of Ethereum and other proof of work coins, that is put up in the air. But in the case of Bitcoin, certainly having something like a futures, like we've had with the CME futures, has been nothing but bad. First, because it draws liquidity away. Again, as I mentioned, a lot of the traders, instead of buying the underlying asset, they will go buy the derivative contract. And then secondly, because it removes that entire value proposition. So that's the negative, in my opinion. And that negative far outweighs the positive. The positive being that it adds an on-ramp for institutional money. So if you are like George Soros, let's say, and you want to get a huge Bitcoin position, maybe you can't do that just by buying on Coinbase. Maybe you need to buy with derivatives because therein you can increase your liquidity. The order books are a lot better, a lot thicker, so on and so forth. And we've seen, if you look at the CME volume, it's actually quite large. I think in 2018 it made up something around 50% or more of the total amount of volume that was traded, even including derivatives websites like BitMEX. So even including BitMEX, CME did way more volume than everything else, which meant that there was all of this institutional money that was trading Bitcoin, but none of that institutional money was actually hitting the supply. It was all paper. It was all paper trading. It was all derivatives contracts. And so, again, it caused a huge down spike. Now, I'm not saying that was the reason why we had the down spike, why we had the bear market of 2018. Obviously, things were parabolic and things were never going to last. But certainly, you can make a case for judging whether the bear market was as bad or as deep because of the fact that these derivatives released or not. So, something for the viewer to decide. But again, I don't think these institutional investors really need on-ramps. If you want an on-ramp into crypto, just go on Coinbase or just learn about crypto. This is one of the things that really annoys me about the Ethereum trust with Grayscale Investment with Barry Silbert, where if you want to buy an Ethereum today on the market, you can spend about $200 and you can own your Ethereum. With Grayscale, you need to spend, I don't remember what the premium was or what the premium is right now, but the premium has gone as high as like 3 to 5 times the price of an Ethereum. So that means if you want to buy one Ethereum through Grayscale Investment, you need to spend, let's say, $600. Whereas you could have bought 3 Ethereum with that amount of money if you had just bought it on the market. And really, all that means is that these institutional investors are willing to pay these massive premiums just to save themselves about 10 minutes of work of figuring out how a hardware wallet works, how you can go on Coinbase and purchase your assets, how you can purchase assets off of local Bitcoins, let's say, or other people. And so it adds this whole other alternate level, and if we keep babying these investors, they will never cozy up and they'll never warm up to crypto and they'll never learn about how to use it. And so that's another thing that's hampering crypto adoption. Maybe if we actually had people who were institutional investors who bought on the market and learned how these things worked, would have an appreciation for things like Ethereum and Bitcoin and how these assets worked. And then maybe they decide, hey, this is really cool. I actually want to build something on it. And then maybe they build something on it. That can never happen if those same institutional investors are purchasing on the Grayscale Investment Trust, right? They're just purchasing these derivatives. So yeah, I don't like that at all. The other thing, these on-ramps, because in the case of ETFs, they are physically settled, which means that, so unlike the futures contracts where those are derivatives, with an ETF, it's physically settled, which means once the contract expires, you can actually redeem that contract for that amount in Bitcoin, which is really cool and really great. And so you don't shock the supply in that case, because obviously if you buy $100 worth on a contract and the contract expires, then you have your $100 worth of Bitcoin and it's actual Bitcoin in your wallet, which is great. However, the problem with that is if the institutional money is so large and the demand is so huge, you are going to centralize all of the Bitcoin. You're going to centralize such a large amount of Bitcoin in one single source. In this case, it'll be the on-ramp, that you are creating this huge systemic risk, almost like a Mt. Gox tier scenario. You're creating this huge systemic risk. You are having just massive centralization of Bitcoin. And it's not good for the supply. It's not good for the distribution. It's a lot better for Bitcoin because it is a distributed ledger, that you want to have more people. You want to give this to the hands of as many people as possible rather than having it under one individual. So that's another thing that I don't think people think a lot about when it comes to this kind of thing, where if you have an on-ramp and it's very successful, then it will require a massive amount of liquidity in order to deliver these contracts. And if you want to deliver these contracts, then you need to have the Bitcoin. If you have the Bitcoin, then you own a huge chunk of Bitcoin. Go check the Bitcoin rich list. The largest wallets are, they're the Huobi wallet, the Binance wallet, all of the exchange wallets. And you could definitely say that these wallets are at risk because there's such a large amount of Bitcoin in them. If any of these wallets ever get compromised, I mean, good luck, right? So certainly, I think from that perspective, it's another reason why I think on-ramps do more harm than good when it comes to Bitcoin and Ethereum and all of these crypto coins. And finally, if we look historically even, Bitcoin has chugged along for years. It has never had an issue without an ETF. The price has gone up ridiculous amounts. It's gone down ridiculous amounts. We've had booms. We've had busts. People have come to this community. They've built out a lot of infrastructure. We have things like BitPay. We have a lot of things that are being built for Bitcoin, and no one's waiting for an ETF because you don't care about an ETF. If you're a coder from let's say you're a coder from the Netherlands and you learn about Bitcoin, well, great. You can start coding for Bitcoin right away. There's nothing that's going to stop you. There's nothing that says, oh, you have to wait for an ETF or you have to wait for an institutional on-ramp. No, the great thing about crypto is that anyone can get involved, and people have been getting involved. And so as much as the SEC is being slow in delivering these instruments for institutional investors, it is actually giving a lot of time for people who aren't institutional investors to get in there and get in early and build the right product and build the right infrastructure, because they can do it, because they're not sitting there waiting for ETFs. And so in that sense, Bitcoin doesn't need an ETF because it has done just fine in the past, and I think it'll continue doing fine in the future. And the final point I will say is that people look at this ETF as something that is somehow going to bring Bitcoin to new heights. It's going to bring Bitcoin to the world stage. It's going to bring Bitcoin to new relevancy and credibility. And the truth of the matter is, there's nothing in the world, in my opinion, that can make or break Bitcoin. And it's certainly not an ETF. I absolutely agree, or I actually believe that with my full belief. There's nothing that is going to make or break Bitcoin. Bitcoin is what it is because of the circumstances that surround it, because of the network of people who support it, because of the community of people who love it and who code for it and who develop for it. There's nothing that is going to get in the way from a developer community and Bitcoin, and it's certainly not an ETF. It's not going to be some weird derivative product, and it's not going to be anything else that gets in the way of people developing for this thing, bringing value to it, and through that is really where we will see all of the additional appreciation of value and increase of market cap and all of those great things that we as investors love about Bitcoin. So that was the video. I hope you guys enjoyed that. Please give it a like if you liked it. Subscribe to the channel if you want to see more. Yeah, had a pretty bad day today. I think with the Bitcoin going down, unfortunately, I think we're at almost $10,000 now. So we'll have to see with the next market watch. Anyway, subscribe to the channel. Follow me on Twitter at PhilBeforeShill, and I will see you guys next time.